So this afternoon, we're going to be looking at candlestick patterns. Candlestick patterns, the practical side of this course. Now, the Monday class we had, there was the theoretical part of it where you were shown what the candlesticks are. But then in this class, we're going to be going straight to the chart to look at what these candlesticks are and how we can use them effectively to make profits in the market. Yes, thank you, Ichioma Mao. We're looking at candlestick pattern. All right, so we'll just quickly run through the theoretical part again for the benefit of those who are not available on Monday. Then we'll go straight to the chart. All right, candlesticks. Candlesticks were formed by Japanese rice merchants in the 18th century. And the important part is actually the patterns. We have the hammer. The hammer is usually formed at the bottom of a downtrend, and it signifies a reversal from downtrend to uptrend. Then we have the shooting star. The shooting star is always found at the top of an uptrend, and it signifies a reversal from uptrend to downtrend. Then we have the bullish engulfing pattern, which indicates a reversal into the bullish direction. And we have the bearish engulfing pattern also, candlestick pattern, which signifies a reversal into the bearish direction. And finally, we have the doji, which indicates an insignificant, which indicates an indecision rather in the market. The market is indecisive. When you have a doji, it's not deciding whether to buy or to sell. It's just market is in a state of equilibrium. And when you find a doji at the top of an uptrend, it could mean price could reverse downwards. And also you find it at the bottom of a downtrend, it means price could reverse upwards. Now there are other candlestick patterns aside these ones, but we're just focusing on these ones for ease of understanding and assimilation of our students. So I'll just flip over straight to the MetaTrader platform so that we can see these things on the chart. All right, the first we started with on the theory is the hammer. And I'm going to show us the hammer on the daily time frame. And I'll be looking at the New Zealand USD. Here we have a hammer. From what we saw on the theoretical part, the hammer is formed at the bottom of a downtrend. Price is trading downwards. Then you'll see a candlestick with a small body and a long shadow. And usually the confirmation candle needs to also be noted. The confirmation candle is that candle immediately after the hammer. That is a full bullish candlestick like this one. So here we have a hammer. And there's one thing to note about candlestick patterns generally. They are often more effective when you see them around support and resistance levels. So now for a hammer indicates a reversal from downtrend to uptrend, meaning anytime you see a hammer, it means the hammer candlestick pattern will generate a bullish signal for you. Now, one thing that can enhance this bullish signal that the hammer can give you is when the hammer candlestick pattern is found at a support level on any of the time frames. Though I would suggest you be careful with lower time frames like 1 hour or 5 minutes. Anything from 1 hour upwards, it's perfect. 15 minutes sometimes can be used also, but I prefer you start from 1 hour time frame. So in this example, you can see on the screen, we have the hammer candlestick pattern formed on a support zone on the daily time frame. And see what happened. Price broke out massively in the bullish direction after the formation of the hammer candlestick pattern. If you look at the close of the confirmation candle, from there upwards, price was able to generate about 108 pips, which is nothing, is not bad in any way, for any kind of trade, whether day trade or swing trade. That is the power of the hammer candlestick pattern. So in essence, anytime you see a hammer candlestick, especially around a support, if it's a hammer, then to be effective, it must be, if it's found at a support level, that's a double confirmation that price will go in the bullish direction. Because support itself means that we're looking for opportunities to buy, and the hammer is also meaning we're looking for another opportunity to buy. So we have two valid reasons why we want to buy when you find a hammer at a support level. And next I'll show us is the shooting star. Now this one took place today. It was an opportunity, a trading opportunity today. Now a shooting star is the opposite, the direct opposite of the hammer. Hammer is found at the bottom of a downtrend. It's a candlestick with a long shadow and a very small body where the shadow is facing downwards. The shooting star on the other side is found at the top of an uptrend. And it's a candlestick with a long shadow and small body with the shadow facing upwards. Now, here on the GBP AUD on the 1 hour time frame, we have a clear example of a shooting star. Is that candlestick up there that I circled with a long shadow and small body? One, it is found at the top of an uptrend. Two, it is equally found at a resistance zone. And that resistance zone dates back to the daily time frame. It's a daily time frame resistance. Now we found it forming a rejection candle on 1 hour. This is a double confirmation of a reversal in price. And you can clearly see that price reversed afterwards on the 1 hour. This happened today and it already generated about 50 pips already. Is retracing. There is likelihood of a continuation after now. So this is a shooting star. So these candlestick patterns, they can, like I said, you can find them on any time frame, but start from 1 hour. 1 hour, 4 hour, daily, weekly, monthly time frame. They're available on all these time frames, pointing you into the direction the market is expected to go to. So the shooting star means that price is reversing downward, so it generates a bearish signal or a bearish trading opportunity. Also, there's another setup on the GBP-JPY, and it's equally a shooting star. All right, so this is a shooting star on the 1 hour time frame. You can see a candlestick with long shadow, small body on a resistance level on the 1 hour time frame. Now this happened, I think, a couple of days back. Let me confirm. This was on Monday. Today's 20th. This is Monday, 16 hours. You can clearly see a shooting star, and you can see the confirmation candle is a bearish candle. It happened on the resistance level, and after the formation of that pattern, what happened? Price declined. Price started selling, and recent low here shows that price dropped to initially a 50, 46, 50 pips, dropped to like 67 pips, and way downwards to the recent low at over 200 pips. You know, even if it's the first level it gets to at 50 pips, that's a whole lot on a 1 hour time frame. So for those who are just joining us, we're looking at candlestick patterns, and I'm showing us how we can use this to trade, especially when we find these candlestick patterns around resistance and support levels or resistance and support zones. So here we have the shooting star on the GBP-JPY on the 1 hour time frame, and I've showed you how it has reacted around this level, going in the bearish direction. Now the next pattern I want to show us is the engulfing candlesticks, and I'll start with the bearish engulfing candlestick pattern. And we're going to look at the CAD JPY. Now this is a CAD JPY on the daily time frame. A couple of weeks back, we have this pattern that formed here, a bearish engulfing candlestick. Now, that long red candle is an engulfing candle because it's completely superimposed itself on the previous bullish candle. And that candle itself is also the confirmation candle that the trend has changed from uptrend to downtrend. Anytime you have an engulfing candlestick pattern like a bullish engulfing or a bearish engulfing, it's an indication that price has reversed completely. Here, the market was originally on an uptrend up until this bullish bearish engulfing candlestick was formed and the market reversed downtrend. Now, there was a slight retracement, then a continuation, and further continuation is still anticipated on this instrument in the bearish direction. So here we have the bearish engulfing candlestick pattern. Another example of the bearish engulfing candlestick pattern is the GBP USD on the daily time frame. Here we have a bearish engulfing candlestick pattern at a previous support turned resistance, and that led to further bearish continuation. Now I can see after the bearish engulfing candlestick pattern was formed, price dropped to the tune of about 350 pips because it's the daily time frame, though that won't happen on the lower time frame. So here we can see that this actually works. Again, if you find it around support and resistance, that adds additional volatility to such kind of setup. Now, aside the hammer, the shooting star, the bullish engulfing, bearish engulfing, like I said earlier, there are many other types of candlestick patterns, but then it's just better to focus on the major ones and the ones that happen more consistently in the market. Now, another type of candlestick that happens more often in the markets are called the rejection candles, or otherwise called the pin bars. Whichever name suits you. I prefer to call it any one of them, but then I use rejection candle more these days. A rejection candle is actually a candlestick with long shadow and small body. And just like they are very close in some instances to a doji, very, very close to a doji. But nonetheless, you can call it doji in some instances, but in some instances, it doesn't be like a doji. Just know that it's a candlestick with long shadow and a small body. Now, I'm going to give you some examples of these rejection candles because rejection candle alone can make you a lot of money in the market. So I'll start with the first one, and that's the USD JPY on the daily time frame. All right, so this is the USD JPY on a support zone. This is a rejection candle. It's not a hammer because the next candle to it, the confirmation candle, is not the right kind of candle you use for a hammer. The confirmation candle for a hammer will be a full green candle. But here, it's not a full green candle. It bought a little, and I think that was a kind of retracement. So we will not call this a hammer, but then this is still a valid rejection candle on a support level. And what happened afterwards? Price blew up into the bullish direction. Let's check out the number of pips generated in this move. This generated over 560 pips on the USD JPY. So that's a rejection candle on a support level. Next is the AUD USD 4-hour. We're still looking at rejection candle. All right. This is the AUD USD on the 4-hour time frame. Can see price hit a previous support, which became a resistance. But then these are two rejection candles on that resistance level on the 4-hour time frame. And you can see that price dropped, retraced, and continued dropping further, generating a total of about 103 pips on AUD USD. Another one is the Euro card on the monthly time frame. Here we can see the Euro card on the monthly time frame, and we can see different rejection candles, candlesticks with long shadows projecting upwards. Anytime you have a candlestick with long shadow, small body, most of the time you can call them a rejection candle, especially when it doesn't have a clear formation, whether it's a hammer or shooting star or any of the likes. It's just a rejection candle. So here we have this rejection candle hitting the resistance zone, and that led to a bearish movement. So a rejection candle is a candlestick with long shadow and small or very tiny bodies. You can see the support zone hitting the shadow of this candlestick, and bam, price pushed up. Also, we check the GBP JPY. GBP JPY on the 4-hour time frame. Here we can see price hitting a resistance level and having a rejection candle form, which led to a bearish movement. Again, we have a support level here, support, rejection candle, and price bounced back up into the bullish direction. All right, that'll be all from our end this afternoon. If you have a question, you can go ahead and post it on candlestick patterns. Now, a little recap for those who joined us late. We have looked at candlesticks. We did a recap of the candlestick pattern done on Tuesday. On Monday rather, and also going a step further by showing you on the chart different chart patterns. We've looked at the hammer, the shooting star, the bearish engulfing candlestick pattern, the doji, or otherwise called rejection candle. So the floor is open if you have any question to ask about all these things we've said so far. You can go ahead and either unmute your mic or type the question, and I'll surely attend to them. So the floor is open. All right, in the absence of any question, let's not forget, tomorrow is our physical training at our two locations in Abuja and Lagos. If you live in Abuja or Lagos, try to make yourself available for this physical training event. We'd love to see you at these two locations. All right, so that's the end of this training this afternoon. Most importantly, don't just always attend these classes. Try to start putting what you have learned, try to put it to work, try to practice it. After today's class, go on your chart and try to start identifying candlestick patterns. I tell you, it will improve how you trade. It's going to help you to analyze the market better. So going forward now, if you join our money analysis and I start talking about candlestick patterns, then you understand what I or any other person that is taking the class be trying to say. All right, Stephen Olorutoba, I'm attending to your question now. Now, we only treated a few of these candlestick patterns today. We looked at the hammer. I'm typing it in the comment section. We looked at the shooting star. We looked at the bullish engulfing candlestick. We looked at the bearish engulfing candlestick. We looked at the doji. And we looked at rejection candles / pin bars. So anytime you see a doji, you see a hammer, it means you are looking for a bullish signal and a signal to buy. When you see a shooting star, it means you're looking for a bearish signal. That is a signal to sell. When you see bullish engulfing pattern, that means you're buying. Bearish engulfing pattern, you're selling. Doji can be any direction because it's an indecision candle. But if we find it at the top of an uptrend, it means price will reverse into the bearish direction. And if you find it at the bottom of a downtrend, it means that market to reverse into the uptrend or into the bullish direction. So I hope I've answered the question, sir. All right. You're welcome, Mr. Steven. Okay, so that'll be the end this afternoon. Take care and enjoy the rest of the day. Bye-bye. You're welcome, sir. Mr. Ochon.
Hello, sir.
Yes, sir.
Please, will the video be available, sir?
Of course, we're going to upload it online for you to watch.
But I missed some part of the analysis. So, all right, thank you, sir.
You're welcome.